Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to another episode of the Coffee Hour, where we're going to be going over a bunch of new ETFs that are coming out. This will probably be more of an ETF heavy kind of stream. We'll talk a little bit about Nokia. We're going to be talking a little bit about Qualcomm, and we got some news coming out of Coinbase regarding the tokenization story. So we'll be going over all of that. On the top of everyone's mind at the moment, I'm sure, is the whole Iran-US deal. We saw the markets have an absolute rip on Monday, which was fantastic. But it looks like some people are taking some chips off the table. We also had SpaceX finally start to push a little higher. Friday was kind of dull, and then into Monday morning, it was still very dull, and then finally it started to get a lot of momentum. So we will cover that and just kind of take a look. All right. So as always, appreciate you guys joining me for the stream, and I want to front run this at the beginning. Over the next couple of days, I will not be streaming. I will actually be traveling and getting some air miles in. So do appreciate everyone joining me for the stream, and let's get right into it. All right, so we do have Victor Sink up in the chat saying hello, and we got Sean giving me the eyes. All right. All right, let's get right into it. Let's take a look at the heat map where we want to see what is going on. And we see that the semiconductors all sold off today. All right, we see MP Power down quite a bit. Intel down almost 9% on the day. What the heck happened to the semiconductor space? Looks like it was sell hardware, buy something else, buy financials, maybe sell hardware, sell software, sell most of the Mag 7, Google up 1%, Tesla up down 1.58%. Maybe SpaceX was sucking up all the money. It doesn't look that way. But we do see that it is a Christmas tree, so it is it is sort of evenly spread. But we do know that the semiconductors had a pretty bad sell-off today. All right, let's take a look at futures and see what we're shaping up to be for tomorrow. So far, S&P 500, Nasdaq up 12 basis points and 20 basis points, respectively. We have oils below $80, but finally below $80. So this is a huge positive sign. We do have the FOMC meeting happening tomorrow, the first press conference for Kevin Warsh, and I think this is going to be extremely important. So this is probably why we're seeing kind of a sell-off in the semiconductor space, at least in my mind. Probably that's the reason. People are just kind of flocking to safety because we don't know what the heck he is going to say. I think the entire market is going to be hanging on every single word that Kevin Warsh has to say, especially the press conference that happens right after. So we already know that, again, he's not going to raise rates or lower rates. We're more than likely just going to remain steady at this current pace. All right. So anyways, that's what futures is looking up. Again, gold being a lazy metal, silver not doing much at all either. Copper, palladium. I did see something that said copper had finally broken out. So, that copper thesis is playing out quite nicely. All right. Looking at crypto, again, a little bit of red, right? Not too bad. All right. I will take that. We're still above 60,000, 59,000, whatever it was. All right, let's get into the first one. All right, S&P 500 down 59 or 57 basis points. We have SpaceX up 4.83% on the day. It was much higher, hovering around 220. And then as soon as the market kind of opened up, it seems people just started taking their money out, right? Started selling off those shares. But, again, SpaceX is going to, what is the market cap right now? I think it's close to, look at this, 2.66 trillion in market cap, which is insane. If we look at Nvidia, which is, again, one of the most valuable companies in the world, their market cap is 5 trillion. So I think SpaceX is already hovering around Amazon's market cap, if I'm not mistaken. Yeah, 2.65. So in terms of market cap, SpaceX has already caught up to Amazon, and it's barely been out, 2 days. All right, so who else do we have? We have Skeptic up in the chat. Good evening. And we have Jack to the T's saying cheers with some beers. All right. We have from Bond, good evening. Well, good evening to you, Bond. We also have Kevin saying good evening. Good evening, Kevin. All right, we have Sith of Mordor, finally able to catch a live show. I appreciate you, Sith of Mordor. I do when you join in on these streams. All right. So anyways, and we got Marcia. I don't think I've seen you post before, so welcome to the show, and let's get right into it. Okay, so SMH, semiconductor ETF down 4.8%. Again, I think it's just people getting some money out of the semis. They've had a very, very nice run, all right? This very super nice run. Doesn't mean that it's going to stop anytime soon. I don't predict it will. Again, just you got to look around what's happening. Data centers are still being built out. There's news coming out that, some are being paused or canceled. There's some, FUD out there that we don't know if all the data centers that are being proposed are actually going to get passed. It turns into a very political discussion when it comes to the data centers, especially in some of these states. But we do know that data centers are in fact being constructed, are in fact being built, and you got to fill these data centers up with semiconductors. So again, semiconductors, this chart should kind of scare you. I mean, sometimes you should look at these charts and just be a little cautious. Okay. Just be a little cautious is all I'm saying. All right. Anyways, I want to go in with that. By the way, I'm not bearish semiconductors. Okay. Let's get that point across. I'm not bearish on semiconductors, short-term volatility, right? But over the long term, easily this next, decade, 5 to 7 years, because we've already been in this thing for about 2 to 3 years now. This AI build out, this AI talk, this AI story. So at least over the next 7 years, we should continue to see all this play out, right? Continue to see SMH companies within the semiconductor space continue to do well. We have DRAM. All right. Nothing wrong with DRAM. Still doing really well, down 4% for the day. Year to date, still up 145%. All right. The story is still there with Micron, SK Hynix, and Samsung Electronics owning the HBM and the DRAM market. Insatiable demand for their memory. Okay, so that story is not going away. You have SanDisk again, also with their SSDs. You also have Western Digital, Seagate in there, also doing very well. So again, the memory story has not gone away either. All right, even when we have these little minor pullbacks, all right, these sell-off days, it's nothing. In my opinion, at this current moment, nothing to be worried about as far as the story and the demand. All right, we already spoke several hundred times at this point about Micron saying that all of their future production's already bought and paid for. And we will be getting into another semiconductor company here in the near future that I would have never thought about, but it's starting to make its rounds. So we will cover them in just a moment. All right, gold up 28 basis points, the laziest of the lazy metals. Looks like it's starting to finally have some type of movement. We'll see if we continue pushing higher up or if this was some type of a trap and we go lower. Again, tomorrow I think is going to be a very big deal with the FOMC. So that is something I'm waiting on. I haven't really been opening or buying anything new. I'm just staying still, right? I'm just being patient. Bitcoin down 1% today. Not that bad. I mean, look at this, right? This was on the announcement of the Iran US deal. So it's only normal that, some people are taking some chips off the table. Probably people who are going, 100x or something on this. Let's see what we got here. We have from Sith Mortar. Today is the start of the daily pay for SATA. Yes, it is. SATA, for those who don't know, does pay a daily dividend. It is a Bitcoin-powered preferred stock. All right, preferred stock from Strive. ASST is the ticker for Strive, the company, similar to MicroStrategy or Strategy, MSTR. All right, so that is what they're doing. I actually just heard a very good podcast episode with Ben Workman. And I did not I had to look on X because this is an older podcast. I think this was like maybe a year and a half old or something. And I did not know that he's the CIO, the Chief Investment Officer of Strive. So that is really cool to see because I was listening to him. I was like, man, this is a really good interview. This dude really knows his stuff. And then I looked him up on X and sure enough, he's with the Strive team. So that is awesome. People trying to debate with me on X. Oh boy. Skeptic, man, welcome to the public eye. All right, if you guys aren't checking out Skeptic's content, definitely worth a follow if you're on X. All right, he's always posting new ETF drops and kind of just his take on them. Let me give him a quick shout out over here. Again, whenever you're in the public eye, this is part of it, right? This is part of it. You're always going to be fighting and arguing and debating, et cetera, et cetera. Everyone's a genius on X. And that I learned to tune it all out at this point. I mean, you could just look in the Bitcoin MSTR communities and my God, is that super toxic, like super, super toxic. I mean, being a BM&R shareholder, I mean, you get the worst of it. You see the worst of it. I learned to tune it all out. Anyways, that's just me from an observation point of view. I know you're pumping out content and it's completely different, but Anyways, let's move on. All right, from that, let's see what else we got. We have Sean saying throw some money at the companies building out these data centers. Absolutely, right? There's an ETF for that in case you guys don't want to go out and pick and choose, right? There's data centers from Global X. That is an ETF. There's also all the individual companies you can look at that's involved in that ETF, and you'll have companies like Eaton, right? You'll have companies that do HVAC, that do power turbines, and I think Mitsubishi is probably in one of them. You'll have the fiber optic companies, tons of stuff. As a matter of fact, I was talking to a buddy of mine, and he was saying because one of his employees had left the company working overseas and went back to the stateside, and in Texas, there's like this huge demand for fiber layers, or they call them ISP, OSP technicians. They basically lay the fiber in a building or lay the fiber in a ground. And with these, there's like this crazy demand for these technicians. So again, sometimes the proof is in the pudding that demand is there, and they're taking this data center build out very seriously. Let's see what else we got. Shooting star pattern on WDC. All right, Western Digital, is that what I don't even know what a shooting star pattern is. All right, we also have Sean saying STRL. I don't know what STRL is. Let's take a quick look before we get into the rest of the stream. STRL stock. Sterling Infrastructure. Penguin would be another one, right, that we talked about in a different episode. But Penguin, PENG, Penguin Solutions, they're helping build out these AI factories, right, that Jensen Huang's always talking about. And eventually, it's not going to be these single data centers that are just located all over the place, right? When you look at a data center, usually it's by itself. In the future, what kind of Jensen Huang is talking about is these AI data center clusters. So you're gonna have multiple data centers that are clustered together across, probably different zip codes, geographies, state lines, etc. So Penguin Solutions is also helping them. But let's take a look at Sterling real quick. So it is overview. Let's see. Engineering and construction, industrial Sterling Infrastructure engages in the provision of e-infrastructure, transportation, and building solutions in the United States. It operates in 3 segments: e-infrastructure, transportation, building solutions. Let's see. Let's see. Sterling Infrastructure. There we go. That's what I was looking for. Largest specialty site development company. So these guys are probably helping build some of these data centers out there. Let's see what we do. Sterling announces acquisition of Stone Ridge Contracting. Let's see what the e-infrastructure is. Planning, design, construction, electrical, maintenance, retrofits. Yeah, I mean I don't know if this company is in kind of the data center ETF or anything. Because I mean, if you just want a quick and easy way to find out which companies are involved, you can look at the Global X Data Center ETF. There's several of them out there. There's also the Vista Shares ETF out there as well. So I mean, I'm sure this one's probably in there. But appreciate that. All right, Sean, for the audience, here's another name you guys can research. All right, not financial advice. I'm not saying go out and buy this whatsoever. All right, we're just looking at it. We also have Rodstamon saying, please bleed out tomorrow for the market. Hopefully we get some more red. In my opinion, I think we will. Powell looks like looks nice for an electric data center build out play. Oh God, here we go. All right, ladies and gentlemen, you might as well just put these on your radar. All right, put it on your radar. You have Powell. Okay. Maybe this is where Jerome Powell is going to get his next job. All right, let's see. 6 months, of course. Why am I not surprised? Why do I even bother? Why do I even check the freaking year to date or 6 months? I already know this is probably up 150%. But anyways, yes, we over the last month up 9.7%. Let's see. This is a mid cap, which is a little more safety there, so that's good. Let's see. Yeah, at a $292 price tag for a share, I feel a little more safer with something like that versus like a $5 or a $3 stock. But let's see. Earnings look good. So they've been doing well. Yeah. I mean, let's see if we can find Powell Industries website. All right, we'll take a look at this one and then we'll get into the rest of the stream. Let's see. Yeah, I mean, when you're talking data center build outs, I mean, this is pretty much it right here. Well, cool. There we go, ladies and gentlemen, another stock ticker to check out. Sean says Sterling is building out the beginning stage of the data centers. And we have from Rodstamon Investing saying Keel is still killing it. All right, let's get into it. First, got to give a quick little shout out to the man, the myth, the legend, who is also here in the chat today, and that is the Victor Crooks, aka Padre. All right, he did say, did you look at AMPG, right? This would actually be 520 because I am a day after, so he actually announced this on 520, right? And of course, you know, here we go, 520. We can see that the stock AMPG or Amplitech Group had a nice climb up almost 100% from that call out. All right. So congratulations to anyone who did get into the stock. All right. This is not an endorsement. All right. Not financial advice, nothing like that. All right. This could be just some random call out. But Amplitech is kind of important, especially when we're talking about space now and when we're talking about terrestrial data centers and data centers in space, right? Spatial data centers, orbital data centers, all that other stuff. A company like Amplitech Group could have an impact or could have a space in that whole build out, right? So what do they actually do? All right, so it's an American company that designs, engineers, and manufactures advanced radio frequency or RF and microwave components. They are best known for building domestic infrastructure hardware, including 5G open RAN systems, cryogenic amplifiers, and quantum computing components. All right, so this is who Amplitech Group is. Again, this is a very, what is it, a small cap, I think? Yeah, barely 222 million for their market cap. So again, you know, very high risk when you start looking at these very small cap companies, right? So again, not a financial endorsement, but congratulations to anyone in the Discord that did get in on this name. I'm sure you are sitting there very happy 1 month later. All right, so that is who they are. Some of their biggest technologies right now. It's a 5G open RAN tech that they're selling. The company's position itself as the only US-based firm. All right, remember those keywords, scarcity, right? Only US-based firm to design and commercialize an O-RAN category, etc. Massive MIMO radio unit. This hardware is utilized in traditional cellular upgrades as well as AI-enabled wireless prototypes. Okay, AI-enabled wireless prototypes. This is starting to become more important. We've seen stocks like BlackBerry. You guys know that, right? The phone, you know, thing, Ericsson, Nokia, they're all starting to get into that game. And, you know, AI wireless is going to be a thing in the not too distant future. At least that's what, you know, it's starting to pop up all over the feeds. So Amplitech is a prominent global producer of ultra low noise amplifiers that function in extreme cold, i.e. space, which are critical components for quantum computing systems. All right. So also something to take into account, defense and space. They're also involved in that, you know, that space, you know, defense and space. Their signal processing systems are highly sought after in aerospace and government defense applications. All right. And again, this is the only company producing this type of a technology. So that is what is kind of the case for Amplitech and kind of why they've been getting such a huge bid in the last couple of days. All right. So let's see. We have from Sean saying Sterling has a #1 buy on Zacks. All right. And we also have from Rodstamon, Zenitech is in the quantum game, just got a big deal. And then we have Sergio up in the chat, Cookie Mon. All right. I am here. I am alive and I am breathing. Fantastic. Milk and Cookie Mon. Excellent. All right. Let's move on from that. All right. We're going to talk about our first ETF that we got on the lineup. And this is coming from Vega Shares. All right. Vega Shares ETF. So they're coming out with 3, and this is not going to be a deep dive. All right. We don't know the exact holdings of this, and we're not going to kind of, you know, Skeptic was nice enough to create a infographic for this, so we can take a look at that here in a second. But this is the Vega Shares Synthetic Mind ETF. All right, this is the ticker they're shooting for, which is OPAI. And then you have XSpace or SPC, which is the Vega shares SpaceX and Beyond Earth ETF. All right, so now we have another kind of space ETF coming to market. We already have the Mars, the NASA, we have the Orbex from Global X, and then you have Spacey, SPCI from Total Capital. So we have a slew of just a bunch of new freaking space ETFs coming out, right? And then we also have the Vega shares, and this is, I think, is kind of interesting, the Creatorverse ETF. Okay, so this one's going to be T-Talk, similar to like TikTok, but this is for creators. They're going to own companies that are involved in the creator space, which again, it's kind of interesting. I mean, these are some very specialty ETFs, very niche ETFs, I should say. All right, let's take a look at that nice little infographic that was created by Skeptic here in the chat. All right, so this is the Vega shares. Excuse me, I got to zoom out a little bit. I want to get this just right. So this is the Vega shares synthetic mind ETF, all right? Artificial intelligence, software, infrastructure, and digital works. You're probably going to have Nvidia and Microsoft in there. I mean, let's not beat around the bush. So, you know, this is what they're going to be focusing on: AI foundational models, AI software and apps, semiconductors, AI hardware, data center and cloud infrastructure, robotics, autonomous systems, augmenting and replacing human labor. All right. So the likely holdings will be Nvidia, Microsoft, Alphabet, Palantir, and Amazon. Kind of your run of the mill companies, right? Something that's already in a majority of funds out there. So I would also suspect that they're probably going to have a bunch of mid caps in here. I would suspect that they're going to have a bunch of mid caps because these are going to be the up and coming companies, right? The up and coming companies that are doing all the fancy technologies that just haven't been discovered yet, right? Or are starting to come to market. Again, we're talking about names that we haven't really talked about on this channel. Amplitech or Amplit Group, whatever, is one of them. You had Nokia, BlackBerry, right? These are names that we remember as cell phones, and now they're coming out as part of the AI trade. So, you know, it's too many. All right. Anyways, you also have the Vega share SpaceX and Beyond Earth ETF. All right, XSpace, and this is again gonna have the same usual suspects. All right, you're gonna have SpaceX, you're gonna have Rocket Lab, AST, Redwire, Lockheed Martin. All right, these are the areas that they're gonna be kind of focused on: space infrastructure, satellites, communications, defense and aerospace, space commercialization, space launch services, and space manufacturing. And then we have the last one that is coming to the market from Vega shares, and that is a Creatorverse ETF for T-Talk. All right, so I'm actually surprised that Snapchat is still in here. Snapchat just did a CNBC interview, and with I believe it was the CEO did a CNBC interview, and you know they're sporting their new glasses that they're coming out with. It's super thick, like thicker than the Ray-Ban Meta glasses that are out there. Not sure how that's going to play out, but you know there seems to be a huge kind of like not a huge demand. I won't say a huge demand, but a lot of creators are starting to buy the Meta Ray-Bans or whatever glasses, and you know, going out and filming content. No more walking around with a stick, you know, with a camera on the end, or using your cell phone. Right now, you could just have it and do POV or you know, first person point of views. So I think though that content is getting really popular in the creator space, especially for all these, you know, live streamers who do IRL streams. And I'm getting way into it. I don't watch a lot of this junk because it's kind of brain rot, but you have, you know, people who just stream their life, right? They'll just go around, walk around, and just stream what they're doing. I don't know. It seems to be catching on, you know, similar to like all the other trends that are out there in social media, like the mukbangs, right? I'm getting way into it, but yeah, anyways, I thought that was kind of, I think this ETF is kind of interesting. But anyways, that is these new ETFs coming from Vega shares. Honestly, for me personally, not interested in a single one of them. Just I'm not, you know, throwing rocks or throwing shade at them, but I think I have enough exposure to, you know, at least you know, some of these, you know, some of the AI names. The space economy, I'm still kind of iffy on. Still waiting to maybe pick and choose what I want in my portfolio. There's so many out there. There's Spacey for income. Again, there's NASA. Now you have XSpace coming out. So, you know, and we also have the Mars ETF that also increased their SpaceX exposure to 21% in the ETF. So this is from Roundhill. All right, this is the Mars ETF, and they increased again 21% for SpaceX. So now you have, of course, passive funds going into the SpaceX stock, right? And of course, you still have your typical, usual suspects: Rocket Lab, AST, Space Mobile, Planet Labs. You also have Viasat in here. We covered them on the Only ETFs channel as well. All right, let's get to our first big piece of news. All right, this is a clip of JD Vance. All right, this is a day old. I'm not sure if you guys have had a chance, but he's basically going over the US-Iran stuff. And right now, there's I think my news feeds is nothing but US-Iran stuff right now. So instead of going through all of that, we're just going to listen to this clip and kind of hear on the way forward. It looks like the peace deal is holding for now, or a ceasefire, or whatever you want to call it. There's, good, there's bad. I mean, there's just so much noise out there. You really don't know what's true anymore. So I'm choosing basically to ignore it. I think the market, is happy that we finally got at least some type of a ceasefire. Oil's coming down. We see that the market does care about it. But I think after the FOMC meeting, it's just going to continue doing what it's doing. All right. We're going to move past this and forget about it, just like we forgot about all the tariff stuff for a very long time. And then it started rearing its ugly head again when it was, in the Supreme Court. And then even when the Supreme Court overturned those tariffs, everybody forgot, right? The market kind of already moved on. So let's move. Let's watch this clip.
The United States and Iran reaching a peace deal with the agreement set to be signed on Friday. Joining us right now to talk more about it is Vice President JD Vance. And Mr. Vice President, thank you for being with us this morning. I think there's still a lot of confusion about what exactly is in this deal. Can you lay out the terms for us?
First of all, good morning, everybody. Thanks for having us. So first of all, I think it's a great day for the American people, because what this deal does fundamentally is two things. It immediately reopens the Straits of Hormuz. We're already seeing in the past 24 hours more traffic flow. You see oil prices coming down, but you also have the long-term commitment that Iran will never develop or procure a nuclear weapon. Those are two very big wins for the American people. I think the important thing to understand is that the agreement is fundamentally built around a two-step verification process. We say to the Iranians, you are welcome to have access to an unsanctioned economy. You're welcome to be reinvited into the world economy, but only if you honor the commitments that you make in this agreement. So that's the leverage point, and simultaneously the enforcement mechanism we have over their nuclear program. And if you step back, the last point that I'd make about this is that we have affirmatively and comprehensively destroyed their nuclear program from what we've done over the last year and a half in the Trump administration. What this agreement does is say to the Iranians that you don't have access to the money to rebuild that nuclear program, but if you're willing to give up that program long term, if you're willing to accept the inspections and verification regime that's necessary to give us the confidence you're never going to have a nuclear weapon, then we want you to be a prosperous country, and we will reinvite you into the community of nations. And that's fundamentally the two-step process, the choice the Iranians have to make. Do they want access to the world economy? If so, they're going to have to give up the long-term nuclear ambition. If they don't want access to the world economy and they don't give up that ambition, they're never going to have the resources to rebuild it from where it is today. So it's a big win for the American people. And I think the Iranians fundamentally have a good choice here in front of them, whether to be a normal country or whether to be a country that continues to pursue a nuclear weapon, which they now have no capacity to do.
Okay, so let me just make sure I understand this, though. This is 60 days that they will have to kind of discuss and debate the issues surrounding the nuclear question. But for now, they are saying that they will reopen the strait. The United States is saying it will take down its blockade at the same time, that there will be free passage, that no one will have to pay anything to go back and forth through this. The Iranians, I think, have suggested that this is just for the next 60 days. Do you get the sense that this is a more permanent situation where the strait will be reopened even beyond that 60-day period?
Well, our expectation is that the strait is going to be opened in a toll-free way for the long term, and that's the sort of thing that we're going to figure out in these technical negotiations. There are a lot of very important details to figure out that we're actually going to sit at the table and discuss together and figure out a path forward on these details. For example, they've committed to destroy and dispose of their stockpile of highly enriched material. That's the highly enriched uranium that they accumulated over the Obama administration and over the Biden administration. And what we've said is, okay, let's talk about how exactly we're going to do that. They want access to an unsanctioned economy. We've talked about, okay, we're open to that, but that would require a long-term commitment to the inspection and verification regime that I just talked about. So a lot of these details are going to be figured out during those 60-day talks. We feel quite confident that we're in a strong position here. Fundamentally, we have the leverage. We have the diplomatic, economic, and military leverage, but we also are extending an open hand to the Iranians.
We got all the cards, all right? They don't got the cards. We got the cards. All right. I just had to put that in there. Just real quick, we can't talk about that. Again, I try to keep this as politics free channel. But regarding the money, at the last thing I had seen or heard was that this $300 billion fund that the United States is going to help basically hand over Iran to Iran, so they can rebuild, is going to be an investment of some sort. You're going to have some of the GCC put in their money into that, and apparently there's going to be no taxpayer money that goes from this. There's also going to be companies in the United States that are going to be reinvesting in the reconstruction of Iran. Again, I don't know what's true, what's not true. Some are saying that there is taxpayer money. Some are saying that there's not. I don't know. I don't care, to be honest. If it's these big banks or asset managers like BlackRock or Blackstone or I don't know, any JP Morgan, pick your poison. If it's any one of these guys that are putting money into this to help rebuild and then invest into Iran infrastructure, maybe it's a good thing, maybe it's a bad thing. I don't know. I really don't care at this point. But anyways, let's continue listening in.
Iranians and saying, if you guys negotiate in good faith and you make that long-term commitment not to develop nuclear weapons, then we are going to make sure that your country is successful. If, however, you refuse to meet us halfway, then we're going to continue to apply the pressure that we've seen build up economically in particular, and that's going to be bad for them, and fundamentally, it's going to be bad for the region. So we hope they make the right choice. We feel pretty confident about where we are, and we're going to just sit down and talk with them and see where they're willing to concede, where they're willing to make concessions, and make some progress from there.
Who's going to be signing this agreement on Friday from the United States and from the Iranian side of things? Because there's been a lot of questions about who's in charge in Iran and whether, when we're talking to someone, whether they represent all of those parties.
Well, one of the interesting things about what's happened just over the last few months is that our relationship with Iran has fundamentally transformed. You hear the president talk about the fact that we're dealing with a totally different group of people. That's absolutely true. If you go back to the Obama administration, we never had the direct line. Really, over the past 47 years, we've never had this level of direct connection where the people at the highest levels of the United States government are talking to the people at the highest levels of the Iranian government. We expect the negotiating team from the Iranian side is going to be the Speaker of the House, Ghalibaf, and also the Foreign Minister Arachi, along with a number of security officials and people who represent the different constituencies within their country. But we actually see, this is a very interesting thing about these negotiations, is you see people, both the hardliners, but also the more political people, saying our relationship with the United States over the past 47 years has been a mistake. Let's turn over a new leaf. We're, of course, going to verify that they actually mean it. But if they're willing to turn over a new leaf, the President of the United States has said, we want them to be a successful country, and that's what we're aiming to do.
I don't know, man. I don't know, man. I don't know about that. Anyways, geopolitics is exciting. All right. Geopolitics is very exciting. Padre says, we've got all the cards. Sir, this is chess. I think so too. We have Skeptic saying politics every stream. Let's effing go. All right. We also have Sergio saying, yeah, a lot of money. All right. Sith the Mordor saying, her hair looks like she just got busy with a coworker in the broom closet. How dare you? All right, let's move on from this. Oh, we also have JP. All right, JP saying whatever, but I understand where and why JD is saying that. Exactly. All right, let's move on from that. We have Coinbase. CEO Brian Armstrong talking about the tokenization of assets that are being offered on Coinbase to global investors. All right. So I think this is going to be a huge shift. I haven't had a chance to actually watch through this, 3-minute, 3.5 minute, or almost 4-minute clip. But Coinbase has been in the dumps. They fired a bunch of people, right? Their stock price hasn't really been doing much of anything. Same thing with Robinhood, although Robinhood has been moving pretty quickly, right? But this is just further adding to the story of tokenization of real world assets, tokenization of stocks, tokenization of private companies, right? You can even invest in private companies now through tokenization. And this is, Brian Armstrong on that whole thing. So let's listen in on what he has to say. And I believe this is bullish for Coinbase because they need to innovate. They need to find ways on how to continue to stay relevant. It's not just a platform where you go and buy your Bitcoin, right? Or where you go and buy, some altcoins or shit coins, whatever, right? This is why Robinhood also has the prediction markets, right? This is why they also built out, the entire banking infrastructure that they have, right? They acquired a white label crypto company. If you guys forgot, last year they acquired a white label crypto company where they can offer crypto services to companies in Europe, right? So they acquired all these companies to basically that already had the licenses that were operating in Europe, And now they have their foot in the door in that area. So the same thing goes for Coinbase, looking for ways to innovate. And I think this is a great stepping stone. Now, I don't know if I'll be going on a Coinbase myself and buying these tokenized stocks, but in case anyone is interested, you can invest directly or indirectly into these private companies now. So let's listen in.
Hey, Carl, that's right. So joining me now is Brian Armstrong from Coinbase System Update event today. You're going to be unveiling a flurry of product announcements throughout the afternoon. But starting right now, perhaps one of the biggest pieces of news, tokenized stocks. What are you bringing to market? How is it different than what we already see in the market?
Yeah, so people have been thinking for a long time about how to get U.S. equities on chain somehow. And unfortunately, what's out there today, most of these they're derivatives, they're synthetics. They're trying to give people exposure to it, but you don't actually own the underlying asset. And so what we've announced today for the first time is true one-to-one backed tokenized equities on Coinbase. So there's an actual share of the company underneath. You can get the upside from the dividends. You can get the shareholder rights, but you can also get the benefits of it being on chain, which means permissionless access for people all over the world, 24/7 trading. You can even very easily send it to your friends and family as a gift.
That is really interesting. So even if you're buying tokenized stocks, you still get the shareholder voting rights, which is actually kind of a big deal. It's not just stock go up, right? Some people actually do care about holding stock because they want to be able to have a voice and be able to vote. And he just talked about how you can send stock to family members, right, through tokenized stocks. That I think is super cool. I think that is really cool because, I guess the old fashioned way is you send someone money, right? You Venmo them, you Cash App them, you Zelle them and tell them to go buy this stock and that's their present. Now you can just send it to them. I think that's pretty cool.
And so I'm really excited to get tokenized equities live because it's really just going to create demand. And the 4 billion people all over the world that are unbrokered are going to have access to high quality U.S. investments.
Yeah, I think you just touched on this, but to ask the very basic question, what is going to pull investors towards this instead of more traditional stocks traded in a more traditional way?
Yeah, well, we offer that in the U.S. as well, like more traditional stock trading and options trading and all kinds of things. But you have to remember, there's lots of people in the world who actually don't have easy access to U.S. stocks. A lot of countries, like if you're a wealthy person, you might be able to get a U.S. account, a brokerage account opened or something. Like if you're a very wealthy person in Argentina, but like 4 billion people in the world don't have any way to access U.S. investments, like Nvidia or Coinbase stock or anything like that. So they're stuck holding cash and low quality investments. So it's very important for financial freedom that everybody in the world can access high quality investments, and it will just create more demand for high quality U.S. company stocks.
Yeah, and so at least to start outside of the U.S., I mean, another market that you're spearheading that is largely outside of the U.S. is perpetual futures. Big case study for pre-IPO perps last week with SpaceX. What can you share about that? What was the uptake, and how does it set you up for more of these types of contracts?
Yeah, well, we're living in this golden age where some of the largest private companies in the world are finally going public. And in some ways, that's incredible. But it would be amazing if retail could get exposure earlier when they're still private, right? Because a lot of the value upside has already been captured by accredited investors, which of course is like only wealthy people can invest in these private companies. So we wanted to try to, again, democratize access, and pre-IPO perps is a way for anyone in the markets where it's available outside the US at the moment to get exposure to these companies, the largest companies in the world that are coming private, or coming public.
Yeah,
See, that is also really cool. Sucks for U.S. investors, but that is really also cool that you can invest in private companies before they IPO, right? So like imagine, like right now you have to invest in either, RVI, VCX, XOVR, the slew of other funds. And there's even non-traded funds out there that non-accredited investors can invest into. I think Ravin Navicon, I think that's his name. I think he just launched one. But anyways, yeah, there's a slew, like with those non-traded ones, there's a slew of documents you got to read through. It's like a lot of legal stuff, and they're not always the best. They're very illiquid, meaning that if you put in, let's say, and they have minimums usually like $500 or something, sometimes $10,000, sometimes 25. But anyways, you put your money in, there's no sell button in case things go bad, right? So it's hard to get your money out of those illiquid funds. But with, public traded, open funds like RVI or closed-end funds like RVI or VCX, you can hit the sell and get out rather easily. But yes, that is the only way that retail can actually get access to these names, right? The only way to get access to those is through these funds. And there's also another one, XYZ, I think it was, or something like that. That's another stock that you can invest in that has exposure to a ton of private names. But what if you don't want all of those private names, right? What if you just want, maybe one or two, like I would definitely like Anduril. Like I would have loved to get into Anduril much sooner. But now, VCX has it. That's the exposure. And if, I was outside the United States, had a brokerage outside the US, then, through tokenized stocks, I can get that exposure. I can actually invest in Enroll pre-IPO. And as Brian Armstrong just mentioned, that's where a lot of the value is captured. Because, you can look at RVI and look at OpenAI's valuation, and that valuation's up and to the right. It's getting crazier every time they update it. So think of Anthropic, think of, SpaceX before, IPO. That's where a lot of value could be captured, for just an investor using tokenized stocks or tokenized private stocks. So again, I like this idea. It just sucks that we can't get it. You could get it through Hyperliquid. Hyperliquid is, when they're talking about the perps or the perpetuals, Hyperliquid, as far as I know, was one of the first, one of the first exchanges to offer that. So, you got to kind of see what the price discovery was beforehand. So, we saw SpaceX rip up to $200 a share. Even further than that, I think it was up to 260, 270 on the perp market. And then it came down to about 165, 167 on IPO day. So we kind of already knew that the market was pricing in SpaceX's IPO at around 165, 167. And sure enough, it did come out at that price. So, Hyperliquid is nice, especially when you want to see what the market is doing over the weekend. And if a big news event happens, you can see what, is happening to the stock. So you can kind of position yourself or try to position yourself much sooner. So I think the perpetual market is really interesting. And now it's going mainstream, right? After Hyperliquid, it's coming mainstream to Coinbase. So anyways, let's continue listening in on Brian Armstrong.
Of course, getting attention here in the U.S. too. You got American regulator CFTC just greenlighting perps betting on cryptocurrencies too. We've seen some of the traditional exchanges come out swinging on this. Terry Duffy at CME on CNBC just a couple weeks ago saying regulators are creating systemic risk, that products like this incite bad behavior. How do you respond?
Well, I think you have to, anytime someone has a conflict of interest, you have to take what they're saying with a grain of salt because there's a competitive environment. My view is that, it's good for Americans to be able to access these markets. People have to remember, it's not like if U.S. companies don't allow this, it's not like it's not going to happen. Actually, like 80% of the crypto trading is in derivatives offshore. And so when speaking with Chair Atkins and Chair Seelig at the CFTC, they are very much aligned to how do we repatriate these funds? How do we allow the U.S. to stay as a leader in financial markets? And it's very important that we get 24/7 through, perps working for crypto and gold and silver, these kind of other asset classes. So, that's important, and we shouldn't let regulatory capture or competitive dynamics prevent that.
What a time to be an investor. What a time to be a capital allocator, to be just, man, we have so many ETFs coming out. Now we have digital or tokenized stocks right on the horizon. Pending obviously regulatory approval. So just a lot of awesome things coming all day. Yeah, you want a 100x leverage on gold longs? Go ahead, man. You can get that exposure through a couple of these exchanges. I think Hyperliquid also offers that as well. All right, let's move on from that. We already talked about space, Mars, and the 21% allocation to SpaceX, which is actually really, really large. But anyways, let's move on from this, all right, because we already covered it. We have BlackRock, all right, iShares launching the Bita or stock or ETF. Yeah, the Bita ETF, excuse me, the Bita ETF, all right. And this is the Bitcoin Premium Income ETF that's been on the radar for quite some time. And again, if you guys know BlackRock, if you know IBIT, right, the BlackRock Bitcoin Trust, and then, this is no surprise that they came out with a premium income product. Okay. Now they're definitely competing in some regards, all right, with some of the players that we know, right? The Yield Maxes, the Round Hills, the Neoses, all those other guys, right? The Tab Alphas, all those other guys, right? They're definitely competing with them, and they're taking note because they're coming out with a sponsor fee of only 65 basis points, which is much lower than some of the other guys out there, right? But we do have to take a look a little deeper into the books, all right, to actually understand if you invest in this, what is going to go on in here, right? Because they're talking about providing about a 25%, give or take, plus or minus, income distribution. We don't know what that is. We don't know what that classification is yet. We don't know anything about what that distribution is. I was taking a look at the prospectus, could not find any information on whether it's going to be return of capital or not. But there was something interesting that Income Architect actually found. Okay. And shout out to Income Architect. All right, Brad. Appreciate you for posting this. But he says that, warning, Bita distributions may have complex tax treatment, and the fund is expected to issue a Schedule K1, which is not what the other guys offer, right? They offer a simple 1099 div, which makes, tax time very easy, right? When you start stacking on K1s, you can complicate your taxes a little bit. At least, from my own personal experience, right? For my CPA that I pay for, I get charged extra money for every additional K1 I bring, right? They give me, I think, 1 or 2 free ones. And then after that, I have to pay per K1, which, you can increase your tax bill just to do your taxes quite a bit, right? And, the K1, it depends. Some investors really like K1s, especially when it comes to real estate. I've never really had K1s come from stocks or ETFs, so I wouldn't really know. I wouldn't want to be investing in like 10 different stocks, mostly energy related companies, pipelines, oil producers, that kind of thing. MLPs is what they're called, master limited partnerships. But I wouldn't want to be invested in 10 different companies and then getting 10 different K1s, right? I mean, now my tax bill just went up substantially. But anyways, you get a Schedule K1, which is in the prospectus. You have to search for it, which is different from most ETFs that offer the 1099 div. Investors should review the tax information carefully and consider consulting a tax professional per their website. All right, so I thought that was, rather interesting. So I wanted to pull up exactly what they were, talking about, or what Income Architect was talking about, because I was, I wanted to know more about this, because maybe I might be interested in a product like this if you can capture 70% of the upside, and still get paid a decent distribution of about 25%, right? I mean, I would like that personally. So I wanted to pull up their kind of product page. Why would you go for a Bita, or why would you go for this Bitcoin, this Bitcoin premium income ETF? Okay. So you're going to get growth with income potential, right? And they say on this that it is using the same, kind of tax classification as the NEOS funds, something like SPY or QQQI, right? So Bita's differentiated structure holds Bitcoin and IBIT directly for tax efficient growth, while selling options on IBIT that benefit from lower 60/40 taxation as Section 1256 contracts. So this could be actually a tax efficient way, maybe not as tax efficient as 100% rock, deferred capital, getting your own money back, as a lot of people like to say. But I think this is a good thing for this type of an ETF. All right, and then of course you're getting the BlackRock name behind it, right? So why would you choose this? Well, you're going to be able to capture a majority of the upside. You're going to get income generation and reduced volatility. So then they go on to a couple other different things, right? Just how this ETF could perform in the future, et cetera. So I could see this, and you got to think a little further than this, right? Think a little bigger than this. This is not just something that's going to be doing like synthetic exposure, blah, 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 right? This is a ETF that's going to hold actual Bitcoin, right? And IBIT. So that's even more flows into Bitcoin. And BlackRock is definitely going to be advertising this to their client base, saying, hey, you can have that 1% to, 4% allocated to Bitcoin in your portfolio. Do you want to make some money on it, right? Because, Bitcoin is not a productive asset. It doesn't produce a yield. It is a strictly growth product. So what this seeks to do is give them that extra, that extra thing that they want, which is that dividend income or that distribution income. So now you can take Bitcoin, you can have exposure to Bitcoin, have that amplification, that volatility from Bitcoin, but also make some type of income off of that. We already know this for most high yield investors, right? We have plenty of ETFs already on the market, but I'm trying to look at this from the perspective of like an iShares or like a BlackRock client, right? Or a wealth advisor or some financial advisor, right? That's going to pitch something like this. Again, not everyone knows the YieldMax name. Not everybody knows the Roundhill name. Not everybody knows the NEOS name, right? It's still pretty fringe when you look at it. Still really fringe. But when you have a name like BlackRock behind it, that says something, right? That says something big. So I think this is awesome, not only for income-focused investors or people who want to add some type of yield to their, Bitcoin or have some type of exposure to Bitcoin and have a yield, but this is also in my opinion, bullish, very bullish for Bitcoin as a whole, because as more passive funds start to come in this, right? Hey, you have 1% allocated to Bitcoin in your portfolio. Let's take 0.5% and add it to, Bita, so you can get some type of distribution income, right? We already saw that the big success with Stretch, billions of dollars flowed into Stretch, one of the most successful perpetual or preferred shares ever launched in the history of preferred shares. And now you have SATA that's paying you daily. And now, again, you have one of the biggest players coming into the space, the 1,000-pound gorilla coming into the space and saying, hey, we also have an income product. And because it bears the BlackRock name, it's going to be good, right? It's going to be a premium product. So I'm excited for something like this. I'm definitely going to keep an eye on it for my own, kind of portfolio. And maybe in the future, I might open a position in something like this. Why would I choose something like this over NEOS, right? Because NEOS also has BTCI, and BTCI has been, probably one of the dominant players in the space as far as Bitcoin income generation, right? Cover calls, all that sort of stuff. I want to put these up against each other and see how they do. Me personally, I want to see how they're going to do from inception date of Bita. I'll probably let it cook for, maybe the next 60, 90 days and see how they both perform against each other. If what I read is true about Bita and they're aiming for 70% upside with, 25, whatever, 30% distribution rate, I mean, what's not to like about that, right? What is not to like about that? So really exciting stuff coming from BlackRock. All right, so we have just a couple more things to go over. I noticed we're at minute 51. So the FOMC meeting is happening in 16 hours. All right, so expect some volatility ahead. Again, the whole market is going to be waiting on this, right? With the Iran war kind of coming to a not a stalemate, but a ceasefire for now to allow negotiations to happen. Looks like we lost that 50%, right? That 50% probability that we're going to get a rate hike. And it does look like it's starting to come down a little bit. So I think this meeting is going to be very telling about where the Fed is thinking on inflation and where they're going to be heading. I saw an article saying that they want to get rid of the dot plot, which is what we as retail investors would look at after these meetings conclude, so we can see where the board, right, where the FOMC is actually looking at either raising rates, lowering rates, or keeping rates steady, right? The dot plot. So there is an article out there floating around saying that basically Kevin Warsh wants to, more than likely get rid of that because, that dot plot does drive a lot of what the market perceives, right? And then the market kind of perceives, again, every little bit of words that come out of the Fed, whether it's these speeches, from all these governors, or whether it's Kevin Warsh himself or even Jerome Powell, right, before. Hang on every single word, look at every little tiny detail. I've seen some analysis out there that go over each sentence. Like it's ridiculous how in-depth the market can get on these transcripts. But they'll go over everything, every little thing, right? And then kind of extrapolate the direction or guess really where the Fed is heading. So they're going to do away. It looks like they're going to do away at least with the dot plot. There was a article some time ago that Kevin Warsh wants to limit the governors doing public speeches or doing keynotes or any type of addresses while he's in the Fed. So again, we're going to see. It's going to be interesting. He pretty much wants the Fed to go back to being in the background, not so much at the front of financial markets. So more to come on that. All right, let's see. The skeptic says you have enough Bitcoin, you degenerate. You can never have enough Bitcoin. All right. Everyone should get to 1 Bitcoin. I'm going to just say it right here. Everyone should get to 1 Bitcoin if you can, because Bitcoin is never going to be as cheap again in the future. All right. If you've studied enough about Bitcoin, done 100 hours of research, you already know where this is going. You know where this economy, where this dollar, where this fiat currency is going. If you're a believer in sovereign money, like most gold bugs are, then, if you want it digitally, transportable, immutable, all that other good stuff, then Bitcoin just makes so much sense. All right. Whether it's IBIT, if you want less of the hassle of cold storage and getting hacked and all this stuff, you just have it in IBIT, right? Or if you want to go down the Bitcoin Maxi route, put it on a cold storage, handle your 12 keys, spread the 12 keys in 12 safes around the world, right? Whatever it is you want to do, right? Entirely up to you. But I definitely think getting to 1 Bitcoin is important. And we have Padre, and that messaging is coming from British Hodl. All right, I got to give British Hodl his credit because he's the one that kind of orange pilled me into getting to 1 Bitcoin. So Padre says to 1 Bitcoin. So you want me to sell? I just want you to know that I still have that screenshot, and I'm gonna use it at every corner. All right, for someone that was so anti-Bitcoin and pro gold, here you are saying you have Bitcoin. I always knew it. I always just show me your BM&R bag and your Ethereum bag. All right, come out and just show it right now. Stop with the nonsense. You're gonna cough and drink coffee at the same time. All right, let's move on from that. We got some other news. All right, Nvidia is raising another $20 billion. They're going to be offering some bonds. All right, not too much to digest here, but it's just, again, we're covering, Google, we're covering SMCI. They're raising a bunch of money. Google's raising 84 billion. They increased it from 80 billion to 84 billion, and then Berkshire Hathaway has about 10 billion of that. So we have other companies now starting to raise even more debt. And we went over that AI is AI making money yet, right? We went over that chart on the last stream on the Sunday Invest Chill session. And no, Nvidia is the only company making any money. The hyperscalers, OpenAI, Anthropic, they're not making really any money yet. They're not even close to break even. So real quick, Alphabet announced plans earlier this month to raise 85 billion in equity related offerings after securing more than 55 billion in fresh debt since November. They're using an at-the-market program similar to what Strategy and BM&R do to raise money for crypto, right? To buy Bitcoin and buy Ethereum. So now we have hyperscalers also doing the same thing. Supermicro announced a similar thing. Amazon, meanwhile, raised roughly $54 billion in debt earlier this year in the US and European bond sales, and then announced plans last week to raise an additional 10 billion in the Canadian debt market. So all these hyperscalers are all buying for additional money so they can all buy AI CapEx stuff, right? Semiconductors, right? We just talked about semiconductors not too long ago, building out the data centers, securing compute, right? All these hyperscalers, they all want compute. That's really, at the end of the day, that's what they want. You have Oracle that has close to $700 billion in RPOs, right? Remaining performance obligations. So they need to build or capture some type of compute space in order to meet those obligations, right? So they have all that money in the pipeline, just waiting to be realized once they get these data centers all built out and figured out. All right, let's talk about, let's see how much we got. Okay, let's talk real quickly about Nokia, because this is the name we all know, right? The most indestructible phone known to man. You could throw this thing at a car and the car would just blow up, right? The Nokia phone would be okay. But Nokia announces a major expansion of U.S. semiconductor advanced tests and packaging in Pennsylvania to bolster AI growth. Who would have thunk it that Nokia is now involved, or they have been getting involved in the AI trade, along with BlackBerry and along with Ericsson. All right. So I mentioned this earlier in the stream. So this is the news for Nokia. Nokia today announced a major expansion of its advanced test and packaging ATP operations in Allentown, Pennsylvania. The investment will increase domestic production capacity of the optical networking technology that power scalable AI infrastructure connectivity across the United States. You guys might know this as Marvell. All right, Marvell came out, talked about all this, was it co-packaged optics? They've been really focused on the optics and not photonics, but optics space. So now you have Nokia is also interested in this, right? We're getting rid of copper in data centers and replacing it with fiber and fiber optics. So that is the case. Is it going to happen this year? Is it going to just completely wipe out all of copper in data centers? Not in the short term, no. Jensen Huang has been putting a huge focus on fiber connected hardware. He's been building out all of his infrastructure around that. But it doesn't mean that copper is going to get replaced tomorrow, right? It's going to be probably a phase out over the next couple of years, right? As the AI story continues. But the benefits to having fiber optic over copper that we've covered before is that, one, it takes less energy, which is going to become a huge theme in the very near future, is energy, right? Now you have energy efficient chips, energy efficient memory, energy efficient everything, servers, GPUs, CPUs, it's all moving towards energy efficiency. And with copper, it takes less energy, right? You're using light to transfer data across across medium, right, through fiber optic. But along with that, copper is going to be a very scarce asset. As we see, copper markets are starting to break out, right? If you look up copper, the price of copper, it is starting to break out. And along with that, the heat production part, right? In data centers, copper lines produce a lot of heat. Servers produce a lot of heat. You need a lot of HVAC, right? A lot of cooling for that. So with copper, by getting rid of the copper lines in between servers or under the floor and replacing it with all fiber, well, you just reduced a lot of that heat, right? So again, lowering the use of power. So anyways, big news coming from Nokia. We also had so more about Nokia. Nokia's optical technologies provide advanced connectivity solutions for telecom networks to enable AI infrastructure and can reduce energy usage by as much as 75%. The AI supercycle is fundamentally reshaping network and infrastructure requirements in the United States and globally. Our expansion in Allentown is a direct investment in that future, scaling domestic manufacturing of the optical networking tech that powers AI infrastructure. It also reflects strong partnerships between Nokia in the United States and the Commonwealth of Pennsylvania to support advanced manufacturing, create jobs, strengthen U.S. tech leadership, and global competitiveness. And this is coming from the CEO of Nokia, Justin Hodard. All right. A couple other things. I just want to cover this last piece. All right. The investment includes approximately $30 million from Nokia, which includes bipartisan support of approximately $4 million in assistance from the state of Pennsylvania, a $10 million in federal CHIPS investment tax credit. The expansion is part of Nokia's multi-year plan to invest $4 billion I'm going to say that again, $4 billion in R&D and manufacturing in the United States for AI-ready network connectivity. AI-ready network connectivity. All right. We talked about Amplitech. We talked about space. We talked about this, robots, cars, all that stuff is all going to be using AI. There's going to be AI native on all of this stuff, right? Your cell phone is going to have AI native on there as well, right? You're not going to need to download like a ChatGPT or something. It'll just have AI native software on the phone, and everything's going to need internet, right? Everything's going to need it. So this is what they're talking about: AI ready network connectivity. Robots, you can't exactly have connected to your cell phone and then doing whatever. It's going to have some Wi-Fi chip or something. It's going to connect to that, and it's just going to be walking around, right? Or self-driving cars, or maybe construction vehicles. I don't know, right? There's hundreds of applications for AI ready robotics. So anyways, I thought that again was really interesting. It's very futuristic, very in the future. It's not going to happen tomorrow. It's going to take a lot of time. But when we're talking about the AI trade, this is a derivative of that. This is one of the next waves of this whole trade, this whole build out. So again, it's a name I would have never considered in the past. I did. I don't have the screenshot with me, but there was an announcement in the Discord: AMPG, Nokia, BlackBerry, Erics, right? These were the three names, or four names, excuse me. These were the four names all announced around the same time. And I think I bought BlackBerry. Well, I did buy BlackBerry, Nokia, AMPG, and Erics. Sold out of all of them. I just wanted to consolidate. It was too much all over the place. But once I bought BlackBerry, the thing rocketed up. It was crazy. We covered this on a previous stream some time ago. But what is the price looking like, right, for Nokia? Well, this is down almost 6% for the day, up almost 2% for the last 5 days. Over the last month, barely breaking 1.75%. Over the last 6 months, 122% up. 122% up, right? A name, Nokia. Again, I can't tell you like who would have thunk Nokia would be part of this AI trade, right? They make cell phones. That's what everyone thought. No, they pivoted away from that, right? Year to date, they're up 114%. So, is this on investor optimism? What is it, right? Are we going to continue going down? I don't think so. Again, Nokia could be very important to the future AI semiconductor trade. So interesting stuff there. One last thing we'll cover, and then we will call this a completed stream. All right, we're going to cover Qualcomm. All right, you've heard me talk about Qualcomm on the stream before. 1 second. The chips that they're making, right? What makes Qualcomm really an important company is the EV car, right? The smart car. They rely on Qualcomm chips. You guys might know Qualcomm chips also in your cell phones, the Snapdragon processor. All right. But now Qualcomm wants to get also into the data center space. So they've been working on their own AI chips. We know that, Broadcom, they help manufacture a lot of these ASIC chips for like Google or for Amazon or for whoever else, right? They have these partnerships with these companies. You have Google with their TPUs. I think Amazon has their Trainium chip. I believe Meta also had their own chip that they were working on, right? But you have all these, specialty chips. So now you have Qualcomm also getting into the ring with the other semiconductor companies and the hyperscalers to produce AI chips for data centers. So let's listen in on this. It's a 3-minute clip.
Some of those chip names weighing on the Nasdaq right now. And let's talk about that possibility for deal activity from Qualcomm. CEO also laying out a vision for new AI-powered devices to CNBC. That's the focus of today's Tech Check segment with our Christina Partsinevelos. So, Christina, what did we learn?
Well, we learned this morning that shares are up, more than 4%, but you can see much like other chips falling right now, down about 0.5%. And this is a company that Wall Street has long dismissed as a smartphone play, but is now definitely making a serious case that it belongs in the AI conversation. So there are reports that Qualcomm is in talks to buy AI chip startup Tenstorrent for somewhere between $8 and $10 billion. Qualcomm telling me they're not commenting, so neither company has confirmed. But the draw is the talent. Tenstorrent is run by Jim Keller, one of the most respected chip architects in the industry, with stints at Apple, AMD, Tesla, and Intel. So the deal would also give Qualcomm a strong foothold into AI accelerators. Think AI chips as it really pushes into data centers. And then that would mean it would be less reliant on the ARM architecture. On CNBC's The Tech Download podcast just yesterday, Qualcomm CEO Cristiano Amon also laid out his vision for more than 40 AI wearable device designs, smart glasses, earbuds, cameras, even jewelry. But he also made the case for why Qualcomm belongs in the data center. The argument is that as AI agents multiply and handle more complex tasks, they generate a flood of compute that GPUs alone can't handle efficiently. And that creates a surge in CPU demand, central processing units, and that is Qualcomm's opening. The CEO says the company has already built a dedicated data center CPU for exactly that. Next Tuesday, though, is going to be a big catalyst for the stock at its investor day here in New York, where a lot of this will get real. The company is expected to name the hyperscaler it's been building custom AI chips for. A disclosure Cristiano Amon teased on the April 29th earnings call that actually helped push the stock up about over 45% since that date. Those chips would actually start shipping later this year, but there's just very few details. And the big problem is handsets still count for the majority of Qualcomm's revenue, about 57%. And the Apple modem business disappears after this fall, something we know, but still it's happening. Next Tuesday is where we find out if the data center ambitions are big enough to fill that hole, guys.
The other interesting thing we'll get next week.
So there you have it. Qualcomm is getting into the AI data center game. All right. There's only 2 manufacturers of CPUs in the United States, AMD and Intel. That's why they got, the premiums that they got. That's why you see their share prices just going out of this world, especially AMD. Shout out to any AMD holders out there. I'm sure you guys are very, very happy. But, going back to this whole CPU push, agentic AI, the whole story has been about GPUs up until now. We've covered this before. Right now, the ratio in most data centers is like 1-to-8 CPU to GPU ratios. They want to get that down to 4-to-8 and eventually 1-to-1. Right? They want to get that down to where there's, 1 CPU per GPU. And you're going to have the likes of, Intel with their Xeon processors or AMD. I don't even know what server processor they make, but AMD, they're going to be a part of that. Now you have Qualcomm that also wants to get in that. And that's why they acquired that company, right? To offer another chip. You also have Cerberus out there, with their freaking dinner plate size CPU. And, that's focused more on inference and inference trading, if I'm not mistaken. But the agentic stuff, right? The actual agent that's going to be on your handheld phone, or your little computer in a tiny little lunchbox, where you want to run AI natively. You're going to need the CPUs for that, right? It has to be CPU. That's why you have the Vera Rubin, that's also a CPU, right, with GPU. That's coming out of Nvidia. So a lot of exciting things happening in the semiconductor space. Again, the story is not dead. Semiconductors will continue, in my opinion, to push higher and higher. This is why I don't think it's a bubble, right? This is why I don't think this AI trade is a bubble. People always relate this to the dot-com bubble. A lot of those companies were not making money. A lot of these companies are making money, right? And they're betting big on future demand. They already see the demand now. That's why you have Google, Amazon, Meta, and I'm forgetting the last one, but you have all these guys, chasing for compute space. You have Oracle, again, almost 700 billion in freaking RPOs. They're waiting to be realized once they get the damn compute space. So I don't think this AI story is dead whatsoever, or even the semiconductor space is cooked at this time, right? What can change that? I think the biggest threat that could derail this is probably going to come from China, right? Zero Hedge covered this. Zero Hedge was talking about if they were able to flood the market with cheap GPUs, cheap everything, that would they were more so talking about memory, right? And this would directly impact DRAM or DRAM prices from SK Hynix, Micron, Samsung. But if they were able to flood the market with cheaper alternatives, maybe that could derail some of the stocks, right? But Nvidia's like least best chip is 2 generations ahead of China's best quality chip, so there's that as well. And then of course you got the Blackwell and Vera Rubin. So that will conclude this stream, ladies and gentlemen. We see that Qualcomm's price has been climbing. Again, this is still a very early story, 36% year to date, all right, from that low and up almost 100% from April to June. All right. And then it's still hovering a plus 70%, to date from that low. So, I mean, is this an early story? Is the story already played out? Is the stock going to continue up? I think Qualcomm can, pump out those Intel chips, not the Intel chips. If Qualcomm can help pump out some type of CPU, get on at least some type of, competitive grounds with, Intel AMD, I think that story is interesting. I think that has a part as well. So anyways, let's take a quick look at the chat and then we will conclude this stream. I don't think I have anything else for you guys. So the floor is open to anybody. Let's check futures real quick. So MJ Bowhunter says gold and silver is always good to have. I would agree with you 100%, especially if you are, I don't even want to say if you're a believer of the debasement trade. It is actually happening, right? If you understand the debasement trade, gold is definitely always good to have. We also have from MJ Bowhunter Bitcoin and Ethereum, and throw a little bit of XRP while you're at it. There we go. I think there's an ETF for that as well. Yeah, I was like through. All right, and we also have from Skeptic. I like the Snapdragon chips personally. I mean, me too. This is why I don't really go with with Apple products. Honestly, I like Apple. Don't get me wrong. All right. I like the fact that, it's basically, if like when I was an IT technician and I wanted to experiment with like Linux and AWS and all that stuff, like having an Apple computer is great, but Windows is just it's everywhere. It's just so, I'm not going to say it's user friendly because that's not true, but in the IT trade, if you're going to be an IT professional, I mean, Windows is everywhere. You can't avoid using Windows, right? Server administration, cloud administration, Microsoft Azure, the whole works, right? Everything is every major enterprise is built on Microsoft. So I just could not get into the Apple ecosystem. I never really liked iTunes. I don't care about Apple Photos. I think the computer itself is great. The hardware is amazing, but I just never could buy, Apple products. So anyways, S&P 500 is up 24 basis points. NASDAQ 100 up 44 basis points. All right. It looks like oil is still below $80. Gold is slowly climbing back up. All right. So that's what we want to see. Coffee is catching a little bit of a bid. All right. Well, I think that is it for the stream, ladies and gentlemen. I appreciate you all. All right. To the 37 viewers on X, 34 viewers on X. Appreciate you guys joining me for the stream. All right. To the 45 viewers, 46 viewers on YouTube. Thank you guys for joining me on this stream. Again, I will be out of town. I will not be streaming for the next couple of days, doing a little bit of traveling. All right. So I am going to be bringing my laptop with me. So I may try to do, some streaming while I'm on the run. So outside of that, appreciate everybody. Hope you guys have a wonderful day, wonderful evening, wherever you are in the world. Let's take a look at the chat real quick. We have Jack to the T saying I'm indoctrinated into their mobile ecosystem, but I'm not interested in their computers anymore. Referencing Apple. And I mean, yeah, like I think, I think their phone is great. I mean, I've used it a couple of times, but I don't know. I could never get off of Android. Just Android, everything in my own personal life is connected to Android in some way, shape, or form. And I just could never migrate to Apple. So not saying that it's a bad company or anything. I mean, one of the richest companies in the world. All right, ladies and gentlemen, thank you guys for joining. I will see you all in the next stream. You guys have a wonderful day, evening, afternoon, wherever you are in the world. And remember, tomorrow is the FOMC, so be prepared for that volatility. Let's see one last chat. We have Sith the Mordor saying, even though the SLVO hasn't been doing great, it's still paying a fat dividend. There we go. SLVO, which is a silver income ETF. Apple products are great if you don't want to think or have issues. That is true. All right, everyone, take care.